I use this as a life principle, but a lot of things in life, you have to figure out what not to do. It's not necessarily what to do. It's not where to go. It's what not to do. And so it wasn't that investing itself was all bad. It was that the way I went about it was a mistake. And so I had to regroup and recoil and say, okay, people are making money hand over fist all the time. It's happening every day. People are doing it. So I'm just not doing it. So what have I done wrong? Let's learn from that and let's go back in, but let's go back in a little bit more careful. Let's get together with some guys that know something.
All right, guys, welcome back to How to Invest in Commercial Real Estate. We've got a great show for you today. The three of us just got back from ICSC out in Las Vegas. It's the International Council of Shopping Centers.
It's huge, is what it is.
It's huge. Yeah. It is international. Everybody that's anybody in retail, commercial real estate is at this conference at the Las Vegas Convention Center. And I think we had a bunch of good meetings. We talked to both brokers and some equity partners and just trying to meet and network. And I think it was overall a good show.
Yeah, it was a great show. We've only been back one day and somebody's already sent us a deal from that conference, right? So.
Yeah, we got a ton of deal flow for Q3. We got talked to a ton of brokers and a lot of them think there's going to be a massive uptick in inventory hitting the market. So there may be some amazing opportunities coming up.
Yeah, the other news we have today is that this will be the last podcast in this studio, which happens to be Brian's kind of office at his house. And now we've built out a studio upstairs. And so next week it's going to have a whole new look and feel. And we hope that it looks as good in reality as it does in our minds.
Yeah, that's for sure.
I can finally get some work done after a year and a half of not having an office.
Yeah.
That's been my excuse anyway.
Well, okay, so today is an interesting show because we have a guest, and it is an investor of ours. And what we thought would be interesting is to give perspective from an investor on both wasn't involved in commercial real estate, knew some people that were involved, kind of started seeing our deals, started to invest, and has now been invested in, I think, multiple deals. Mm-hmm. And so we thought it would just be good information for people that are considering getting in real estate or becoming investors to hear kind of a real life story of someone that wasn't in the game, that is in the game now, and how their experience has been. So I will welcome Neal Stenzel to the podcast. Neal and I used to work together at Calidus Technologies along with Brian. He was CFO there for years and one of the owners, like Brian, which eventually sold to Honeywell. And so, Neal, welcome. And I just want to give you an opportunity just to kind of tell who you are and a little bit of your background, and then we'll get into how you got into commercial real estate.
Sounds great. Well, thank you very much.
Yeah.
I'm thrilled to be on the show and I love working with you guys. I'm Neal Stenzel. I am the CFO out at Oral Roberts University. Been there for about 9 years this coming June.
It's amazing.
It's hard to believe the time's flied, yeah. So, after Calidus, right, I ended up having, a little bit of cash. And, just think about, okay, what do I do with investments?
Mm-hmm.
Mid-40s. Where do you go from there?
And so had you invested much before then? I mean, or did you have any cash? I mean, did you do stocks, bonds, mutual funds, any of that?
So I was probably traditionally boring, right? I was an 8 to 5 guy, had a job my whole life, graduated from college, get a degree, go get a job. That's what I thought you were supposed to do. You set up a 401k plan. You try to pay off your house a little bit early. You kind of do a lot of blocking and tackling. You do the right things, try to get out of debt. And that's the kind of stuff I did for probably the first 25 years of my working career. Never had a whole lot of money, never took a lot of risk, never made a lot of returns.
And then once you got a chunk of cash, what did you invest in at that point? So what'd you do with it?
Okay, so being an accountant, being conservative by nature, the first
What year
focus
is
for
this?
me.
What year is this? Just
this
for some
is
context.
probably 20. When do we sell?
2009, isn't it?
Sold in 8 or 9,
Sold
or
at
the end of 8, beginning of 9.
And then we got the rest of the money like in 12, I think it was, or something like that.
So there's some opportunity around.
Yeah. So there was, but at the time, the market was really, really volatile. I mean, super volatile. I mean, you're going through the Great Recession, right? We're just coming through that. So I had just watched all this happen. I watched people lose $1 gazillion in the market. And I thought, okay, step number 1, let's not lose all this in about 3 weeks, right? And so capital preservation was the number 1 goal. Capital preservation. I had never seen, this kind of money before. I just had my 401k balance, a little bit of equity in my house. I thought, let's not screw this up. So let's just park this someplace where I think it's safe. I'll earn a few percent. Did some bonds, did some stocks, and figured I'd ride out the volatility in the market and see what people do. And then I went out and searched for a lot of advice. So
Interesting.
I like the tail end of that. I went out and searched for some advice. Background in CFO, bought and sold the company at this point, and still sitting from the perspective of, hey, I'm maybe a little ignorant in this. I need to go out and seek some advice.
Well, I think you have to look at yourself and you have to say, okay, listen, what are you good at and what are you not good at? I was, okay at going to work every day, taking an 8-to-5 job, following orders.
I can also tell you from experience that you weren't just good, but you were excellent at managing companies' money, understanding profit and loss, the accounting portion, probably the best I've ever seen at that. So and analyzing situations, money situations, you were really good at, and because I saw it.
I appreciate you saying that, and of course that didn't make me a great investor though.
No, that's right.
And so I said to myself, okay, I'm not an expert in investing, right? And so that's why I went and sought the advice. I said, listen, I've got some money. I've never really had this kind of money before. I don't want to lose it all, and I'm also not great at this. This is new territory for me. So where do I want to go from here? And I was interested in taking some risk, okay? And I did take a little bit of risk. I ended up getting involved in kind of my own deal, if you will. And I found out about an opportunity to invest in a little business out in Colorado. Complete disaster, right? And so I learned a lot. I mean, it was a heavy price to pay, but I learned a lot. But I also kind of regrouped, and I said, okay, now what do? I need to seek more advice. I need to be a little bit more careful, a little bit more measured, if you will. And so I went on with my life.
What I love about that is the first thing is oftentimes education is expensive.
It is.
And I remember the first time I bought an apartment complex and I didn't understand the numbers and the owner had kind of manipulated them, and we got in and we lost money and we had to sell at a loss. And I think we lost, I'll call it 60, 90 grand. And my business partner and I, we looked at each other, and instead of saying, I'll never do that again, right, which is what most people do, they get out of the game, is we just looked at each other and said, okay, we just got a $30,000 education. Yeah. Right. And we got to take what we learned from this, and then we got to go build on it. And I like that you did that. You made a mistake or maybe learned a lesson, and you decided to take that information and get better instead of getting out of the investment game.
Well, I'd also say what I learned, and I use this as a life principle, but a lot of things in life you have to figure out what not to do. Mm-hmm. It's not necessarily what to do. It's not where to go. It's what not to do. And so it wasn't that investing itself was all bad. It was that the way I went about it was a mistake. And so I had to regroup and recoil and say, okay, people are making money hand over fist all the time. It's happening every day. Mm-hmm. People are doing it. So I'm just not doing it. So what have I done wrong? Let's learn from that and let's go back in, but let's go back in a little bit more careful. Let's get together with some guys that know something, that have done it before.
Yeah. So I loved what you said there about what not to do. What is one thing that we shouldn't do and what we should steer away from?
Listen, I work at a college, and so that's what kids are doing. When they're 18 years old, they come to school, they're trying to figure out what to do, but the truth is they find out 9 things that they should not do before they figure out what they really should do. So back to the statement about making a mistake. It's okay to make a mistake in investing. It's okay to lose some money because it is an education. Yeah. The only way to never make a mistake is never to do it.
Yeah, never to take risk. And I swear, people that try their entire life to avoid risk, they're not going to end up achieving their goals. Yep. There's just no way around it. In this life, you can't have what you want to have unless you are willing to take a risk. And I'm not saying bet the whole farm. No. I'm just saying life is about taking risks, making mistakes, failing, and learning. And then that's how people get where they're going. And so part of this show needs to be teaching people how to take intelligent risks,
yes,
being willing to fail and learn through the failure, and that's the only way you end up on the other side where you want to be.
Yeah, and risk can be a misleading word because it's just one word, but there's this vast range of risk that you have to learn to be tolerable with, and like you said, it's educated risk. It's thought about risk. It's risk that you did due diligence on. It's risk that you got advice on. It's risk that you talk to people about, and at some point at each and every step, it becomes less risky every single time because you're learning and you're turning over stones and you're saying, hey, if this happens, we'll go, oh, wow, that could be bad. Stay away from that, Well,
right. So let's talk about that because you have, in my mind, I categorize it as risk and risky. And so risk might be, hey, I'm going to buy this retail center and I might lose this tenant.
Yeah.
1 out of 10 tenants. Okay. That's risk. I have to assume some amount of risk. But let's say that I'm going to buy a 40,000 square foot, big box with a tenant that's slightly on shaky ground. I can get a high return, but it's risky because if they bail, then I don't have anything supporting me and I have to make the payment myself.
Yeah.
Or, like what I did when I first started investing, I invested with people I didn't know. I had no way of knowing if they were trustworthy or not.
Yeah.
That's risky versus just taking on some risk.
Yeah, it's funny you mentioned that because when you dipped your toe back in that pond and started investing, because this happened before Precision, right? Invested with people you didn't know.
Yeah.
And it also, the real crowd thing. I mean, some of those didn't necessarily go amazing.
Nope.
Again, didn't know them, right?
So there's a little bit of a theme here. Is you really one way to eliminate the risky nature of investing is to invest with a proven track record or someone that you have some familiarity with. Because otherwise, there's no incentive for them not to be honest and truthful with you.
That's a good segue into Neal first investing with us because let's jump to late 2019, early 2020. Braden and I approach you about investing with us, a shopping center in Broken Arrow, and I distinctly remember you saying that one of the first things you said, well, Brian, I trust you, and I know you have a track record. That's going to help. But other than that, we came to you with the numbers, and we were touting 11 or 12% cash on cash, 20+% IRR. What was your first impression when we started talking about returns like that?
Well, because that's super exciting, right? Because I'm still in my I'm getting older at this point, right? Now I'm in my 50s, right? And I'm saying to myself, okay, do I want to make dividends of 3 and 4% for the rest of my life? And oh, by the way, at some point you have retirement. So life events are starting to happen. And so I was looking for something. The timing was right. But I also knew you and I trusted you. And I will say that when you go into investing, talk about risk. I want to go back to that for just a second. There's this thing called swindle risk, which is kind of what you're talking about. If you don't know who you're in business with, there's always a very good chance many times because you're dealing with people's money, that you're going to get swindled. So it's really, really important to know who you're dealing with. And so I had a relationship with Brian. I'd known Brian for a couple of decades, really. And so I trusted him. I knew about Braden, okay? And I heard your story, and I believed it, okay? And when it comes down to returns, again, my first reaction is I don't want to lose money. I don't want to put money into something and find out it was a black hole and it's gone. Stupid risk, right?
Yep.
I remember you asking about the risk was high on your list.
And I sent you a couple of emails saying, hey, I'm just trying to work through this. This is all brand new territory for me. It's not that it's bad territory, just it's new territory for me. And I need to be educated a little bit on this. And I need to talk to somebody who I can trust. And so I sent you a couple of emails. You said, here's been my experience. I've been doing this for 9 years or whatever it was at the time. And had all very positive experiences, And you talked about some of the things that could go wrong. Some of the things that can go wrong is maybe you lose a tenant, but you don't lose the whole shopping center. And so maybe you don't get a distribution that quarter, or maybe you get a less distribution than you thought you were going to get. But it's not like you lost all your money. So it's kind of a calculated risk. It's a reasonable risk. It's a smart risk, if you will. But to get those kind of returns, it's something that you really ought to try. And you don't bet the whole farm.
Yeah, right.
You say, okay, and so I ask you, I say, well, how much, are you putting in? I mean, here you're putting your own money in. Right. I believe you. I trust you. If you're putting your own money in, you're not going to want to lose that. Braden's putting his money in. He's got his sweat equity in. I mean, this is a deal that I want to be a part of. Yeah. I just don't know. I think the bigger question for me was, how much money do I want to put into that?
Yeah.
I think it's emotional to say, okay, wow, I can make 11%. I'm going to take the whole shooting match, and I'm going to take it from a 3 or 4% return and get out of the market volatility. And I'm going to move into this, which is probably a little bit more boring, but a little bit more profitable over time. So instead of doing it all at once, you just say, well, really, I want to do this. I'm interested. Let's do this. But how much?
Yeah. And you've done what we've told other people to do or suggested that other people do, which is put a little bit in this first one, try it out, then maybe a little bit more in the second one, and just get a feel for it, get the trust factor built up, and now you've invested in maybe all our deals.
Probably 8 of them or something. I can't
most
remember.
all of them.
Yep.
So
and go back to the swindle risk, as you say, because I've invested in deals that have not gone well. A couple people have been indicted, by,
I'd say that's,
man.
I'm really good at investing your money. I'm always not so great at investing my money in other people's deals. But I think that's what I would say is people should look for, and it doesn't have to be us. It can be some other person but that I think we eliminate the swindler risk because we are investing our own money.
Correct.
We are investing our friends and family's money. and we have a track record. So, yes.
So we lose money. We show up to Thanksgiving and everyone hates us,
Yep.
and we're getting sued by the bank.
Yeah. So there's a lot of reasons why we're going to stick in the deal. And of course, deals can go south and the market can change. Interest rates are on the rise. But what you want is, okay, did the deal not work? Great. Why didn't it work? And did we do everything that a reasonable, responsible investor fiduciary would do on behalf of our investors to limit their losses and to make the investment as successful as possible? And as long as you have someone like that, instead of someone that will just up and bail, or maybe they were being very, very careless in their evaluation because they just wanted to get their hands on the investor dollars. That's kind of been my experience on a couple of the ones that I've done, is that there was no relationship. They were just seeking whoever would give them money. And when it didn't work, they were gone. They're not going to return your calls. And so you don't want that type of a situation. You want to have someone that you can see their track record. And if you can know them personally, even better, because at least you know what kind of life they live and how they conduct themselves.
I had an investor approach me the other day, and he was playing golf with a buddy of his. It was a Friday morning, and the stock market now is back to that sense of volatility. I mean, almost worse than volatility. It's a bear market in some senses. So there's a lot of money being lost right now. Anyway, most of the time you're talking about that at your buddies with golf, is how bad you suck at golf, first of all, and how much money you've lost and or made. And people talk about that kind of stuff, and I would say 90+% of our investors have a personal recommendation from another investor that is invested with us, and that is the sole reason that they approach us. Mm-hmm. The sole reason they signed up for the list, the sole reason they said, hey, my buddy was telling me about this deal he did. It's doing whatever. I'd love to get involved, or I'd love to ask more questions, or what about this? What about this?
Mm-hmm. It's important. So 2019, you get some of the answers. You think, okay, I'm going to dip my toe in. Tell us about how you started investing, how it went early on, that kind of thing.
And how it's going now.
Yep. So, right. So I stuck my toe in the water. I listened to the advice that you guys provided. I invested. I can't remember what the number was, a couple $100,000 probably. And I think it did 2 deals right away. And I figured I'd learn. If nothing else, I'd learn. Mm-hmm. And if I lost it all, it wouldn't be the end of my life. Right. Mm-hmm. But I wanted to learn, and nothing like learning and putting your own money in it. Right. Yep. So sure enough, 2019, last quarter, I invest in probably a couple deals. First thing that happens is COVID. Right.
Yeah.
COVID.
Oh, man. Here we go again.
COVID shows up, right? And I'm thinking, okay, great. Well, thank God I didn't invest the whole kit and caboodle, right? But what you have to remember is you're in it for the long haul, right? Yeah. Remember the story. The story was, this is not a quick gain. What you're trying to do is invest in something, build some value, and sell at a higher price down the road. And it's a 5 to 7 year time period most of the time. So, year one, you can't freak out. I mean, you just can't. And if you've got your money diversified in enough different places, it's fine. But anyway, to your question, COVID hits and the world shuts down. So, of course, I'm thinking, okay, now what? What have I just done? I've just, kissed it goodbye, because nobody knows what the world's going to look like in a year or two.
We were shipping that money to the Caymans, man.
Well,
Draw One was the boat's name.
Yeah. So anyway, one of the things that I really appreciated throughout the whole process was that every time I had a question, Brian or Braden would be available, right? So if I had a question, I could make a phone call. If I had a question, I'd send an email or a text. I'd get a response. Yep. My experience, when you have a swindler or when you have a bad situation happening, they don't want to talk about it. People disappear. People don't return phone calls. Next thing you know, you're standing there all by yourself, wondering what the heck just happened. Mm-hmm. That never happened with me, okay? So I was never, ever worried, okay? Everybody understands business risk. Everybody understands that things happen. Tornadoes come, insurance happens, floods happen. I get that. Nobody's worried about that. That's not swindle risk.
Right.
Nobody's worried about that. That's business risk. That's going to happen, okay? And but you guys were great about being responsive. During difficult times, be responsive. Just talk to the person. Just say, hey, and you guys did that. You answered my question. You said, hey, it's all going okay. We got tenants in there. People are behind on the rent. Whatever the story was, people are catching up on the rent. You know what I mean? And it turned out to be a great story. So now that's come and gone. Everything has come back full circle. Everything is happening as you said it would. That's the other thing. You want to look at when somebody says, this is what's going to happen. You want to say, okay, there's 50 stepping stones between here and there, right? So what happens on the first one? Is the first one what they said? Yes, it is. Okay, I feel better. Second one, okay, we're marching in the right direction. Third one, same thing. So you start to build up some confidence. And then when they come to you with the next deal, you're thinking, well, everything they said about the first deal, even though it hasn't closed, even though it hasn't finished, even though we haven't finished the 7-year time frame, everything they said is happening the way they said it would.
Right.
And so that's why I invested in deal 3, 4, and 5 before we ever got a return on any of them, right? Because I believed you, because I trusted you, because you're responsive. And one of the things that I think is important to say is that what I was looking for in these deals was a combination of capital appreciation and income, right? It was a combination of the two.
So you've gotten some checks.
So you get some checks. It's not going to make you rich, right? You're making your money. You're making some income. But the point is, it's a point of contact. It's like, okay, they said it's going to happen. It's happening. They said it's going to happen. It's happening. So it just builds confidence, right? And then when one does break, when one does sell, and you do really well, you're thinking, wow, this is awesome. This is really starting to get fun.
Yeah.
Now, let me ask about that. I know you're in several deals, and we haven't sold a lot of deals. So, have you had one that sold and exited, and how did that go?
So it's kind of a funny story because I don't really know what to think about Las Vegas. The whole thing. I'm just kind of waiting for the Lord to just smite the whole place, to be honest.
Come on, Neal.
I just figure I'm going to be there. I just don't want to be there when it happens. Well, so then one of the deals was a restaurant that was in Hendersonville.
Henderson. South, affluent suburb of South Vegas.
Right. I don't want to spend a lot of time in Las Vegas. So this is the first time that I'm sort of out of Broken Arrow, Oklahoma, right? Or an area that I don't really know much about. So I really have to trust you guys, right? I have to believe that you've done your due diligence, that you know what you're talking about, that you've looked at the numbers, because I haven't looked at any of them, right?
And we bought a vacant building in a city you don't like.
Right, yeah. And the city I don't really feel good about, right? And so I thought, you know what? I either trust them or I don't. I'm either in or I'm not.
That's interesting. That is very interesting.
And so I said, again, the first 4 or 5 by this point, it was a year or two in, right? And so I had 6 or 8 quarters where I could see, okay, this is actually happening the way it says. And you got to remember, a lot of this has to do with your family. You got your wife going, what's going on?
Yep.
Yeah. It's not just me, right? I mean, I'm having to kind of account for
my wife
own
still
actions.
asks me what's going on.
Right. So that happened. So anyway, with that, I felt good about it. And I was very, very intentional about saying, hey, this is the quarterly check from wherever it was in Broken Arrow. And so we did that.
I do that same thing with my wife. Actually, I'd let her open the checks in the mail. I'm like, there you go, baby.
I'm not sure what this is. Here, open this. Will you?
I let my ex-wife open them.
You don't just text her pictures of them?
Hey,
no, I owe it to her.
Still investing with us? Still investing with us?
She actually does. So.
Yeah, that's good.
Yeah, I'm sorry. Go ahead.
No, that was pretty much it. Oh, the deal was the first one that closed, this one in Henderson.
Yeah.
And made a great amount of money on it. I mean, a really nice return. I would say more than was expected, more than you represented, which is another thing I was looking for. And Brian, you can attest to this, because when somebody says you're going to make 11% cash on cash, my question is, does 11 equal 8 or does 11 equal 15? Mm-hmm. Or what does 11 mean? 11's 11. As you said it, I don't really know too much about it. I have no experience. And so as you go down the path, you learn, okay, 11 means in this case 13 or 15 or 20, right? Well, this was a kind of a buy resell, right? I mean, it wasn't really an income producer. It was a capital gain kind of a situation.
Yeah.
But nonetheless, when the deal sold, when the check showed up in my bank account, it was well in excess of the representations you guys made. So that tells me that these guys are generally conservative.
So you
They
were
want to be safe.
So you were happy with the
Pleasantly
78.
surprised.
You were happy with the 78% IRR that
Super
just
happy.
want to make sure.
Absolutely.
And I want to bring up a point going back to the checks and the cash flow, is that is giving you our investors confidence when we ship them checks. Because sometimes a sponsor will promise a return, but there's no cash payout. So it's basically just a hope job for 5 years, 7 years, 10 years. And at the end of it, you just hope that it's going to be what it is. But as we pay out quarterly, investors gain confidence because they can see that the deal's working in line with what we said it was going to do, and they don't have to wait 5 or 10 years. Another point I'll make is I have invested online and at CrowdStreet, Real Crowd, and others. And I think there may be 1 out of like 10 investments that I've done that have met expectations.
Interesting.
2 have been fraudulent out of 8 or so, and And most of them are not meeting their cash flow returns or their cash on cash returns. So I'm proud that we have delivered and that we are reasonably conservative. Brian, your first deal, I don't think I pitched you that I was going to triple your money.
Yeah, right.
But that's exactly what we did.
Yeah.
Right.
Brian's still getting paid on that deal. It makes me sick.
But that's what you want is you want a sponsor that isn't pitching pie in the sky numbers in order to solicit as much money as possible.
Right.
We're trying, and this is really honestly what we try to do, is be as conservative and honest as possible. We want to hit every time. We want to hit every number that we project, and I don't think we've hit every single one. We've had deals that have missed a little bit, but most of the time we're exceeding, and that's an important part of being a good sponsor.
Yeah, we saw a speaker this past weekend named Jesse Itzler, amazing speaker. And one thing he said that really resonated with me from this conference we went to is you have to put yourself in a position to be lucky. You have to not create your own luck, but you have to create the situation to where you can attract it to you. Like, is this a situation people normally get lucky in? And you have to say, okay, I'm going to be there. Commercial real estate is a position where you can attract a lot of luck to yourself. A corporate job could move in and bring 100,000 jobs across the street from you, and then you could make tons of money, or all of these things can happen, and it can bring tons of luck to you. So, El Luchador, this Mexican restaurant in Vegas, we knew it was a good deal. We knew it was going to make money. We knew it was going to make a little bit more than the return we projected. But that was 100% a situation where we put ourselves in a situation to attract luck to us, and we absolutely hit a home run on that deal.
Yeah, what happened was the market was continuing to heat up post-COVID, and so we were anticipating selling at one cap rate, but the market was heating up, and so we ended up selling at a lower cap rate than we had projected, and that's why the returns were quite a bit higher than we anticipated.
Yeah.
But from an investor perspective, you have to know, even when you put out that investor sheet and all the information on it, I never heard of that company. I never heard of that restaurant. I don't know anything about Las Vegas.
Yep.
But all of my trust and my confidence is what you guys are saying, right? And as an investor, I'm not looking for, if you would have told me a 78% return on day one, I probably wouldn't have bought in because I thought you were going to be nuts.
Yeah.
You're trying, it's pie in the sky, you're trying to just get whatever. I mean, it's just not real. But you didn't have to do that, somebody like me, if you tell me 11, 12, 15, I'm in. You don't have to say it's going to be 30, even if it is.
Mm-hmm. Funny story about that deal. We flew out to the grand opening of the restaurant, and it was severely not open.
Wasn't ready.
There was
behind schedule.
There was guys working in there at 8 or 9 p.m. and they're telling us stories of like, yeah, we're going to get the CO tomorrow. And I'm like, dude, you're not going to CO this week.
Nope.
Yeah.
But, still did an amazing job. And we've got other deals like that, maybe lagged a little bit in permitting, maybe lagged a little bit in construction. We're still in time frame and the market is doing great to where everything is going to be okay. So everything isn't always going to go right. But like you said, if we're reasonably moving in the right direction and everything starts to add up in your mind, it's good.
Mm-hmm. So let me compare and contrast that for just a second to stocks, okay? Because one of the things that you could say to yourself, and I did this, right? You say, okay, well, I'm going to invest in solid stocks. So even if the stock market goes down, everybody else loses 20%, but your guy tells you that you should be thankful that you only lost 12, which I love that statement. But anyway, I don't like it. So I invest in AT&T, for example. Okay, AT&T's dividend is probably 8% at the time. And lo and behold, AT&T, of all places, cuts their dividend in half, right? And so you invest thinking one thing, and next thing you know, now you got all this AT&T stock. And oh, by the way, when they cut their dividend, what happens to the price?
Stock goes down.
Stock goes down.
Yeah.
So now I've lost my income earning going from 8 to 4. So I invested thinking 8. Now I've got 4 or 3, and the value of the stock's gone down. And who knows how long it's going to stay down, right? Mm-hmm. So all of that emotional roller coaster that's going on just in the stock market. And how close am I to AT&T? How much of AT&T do I own? Yeah. I own a fraction. Nobody cares whether I live or die.
I hate AT&T.
I mean, whether it's AT&T or anyone else, right? I mean, it's all of them. I mean, you own a piece of thin air, and you're inconsequential. You're meaningless to them. Yeah. If I call them, they're not going to call. Not going to return my phone call.
That's for sure with AT&T.
Yeah, right. Might not get through.
Even if you have service problems.
Yeah. So I feel like that's an overwhelming theme. Is going back to the very beginning here. You've got to be seeking advice. You've got to be asking people, hey, what are you doing with your money? What are they doing with their money? If you're getting advice from somebody else, who can I talk to? Find somebody who drives a Ferrari. Find somebody.
Actually, don't do that.
Yeah. Okay. Probably not that where we live. But you need to go out and seek advice and ask questions and find someone who's actually investing in something real. You know their phone number. You can get a hold of them. You know, you can get a couple personal recommendations on this. Like you said, people are making money hand over fist every day, all the time, all over the world.
Right.
So you've got to get networked into those people. You've got to find them.
Yep.
So overall, Neal, it seems like it's been a good experience.
Great.
Hope you continue to invest and hope that this episode just gives people a little bit of confidence. If they're considering investing in real estate, find a good sponsor. It doesn't have to be us, but find someone that you trust, get a good recommendation, and then start slow, right? Let them prove themselves over time. The worst thing you can do is, I tell people, is put all your money on one deal. Right. Spread it out, and hopefully we can be a resource.
Well, thanks everyone for tuning in to an episode of How to Invest in Commercial Real Estate. Like Joel said in the beginning, this is the last time we are in the studio. It has been a long 2 years, and we cannot wait. We cannot wait to unveil this new studio. It is going to be awesome, every part about it. We're going to have, well, I don't want to spoil anything, but it's going to be awesome. So tune in next week for another episode of How to Invest in Commercial Real Estate.
Thanks, guys.
Thanks, Neal.
Thank you.